I mean, we are seeing green across the screen, but obviously that belies what has happened for the rest of the year. So how does this set us up for the next few days?
Good morning, Kayla. Well, it's always nice to see some green on the screen going into the year end. I think that we all hoped we would see some of those tailwinds, whether it was midterm elections or seasonality, give us that Santa Claus rally, which we really just didn't see. I wouldn't read much into it. I do think that the China reopen story is something that's going to weigh positively on markets in the near term. I think going into next year, we're probably going to start off with some of the same problems that we have finishing off this year, which are inflation, a Fed that's just hell-bent on reducing it to 2% and raising rates, getting to that 5.1%. Strong labor market, and we have some concerns going into the year in terms of what will margin pressures be on corporations, what will the impact of the dollar be, how will earnings turn out. But I do think on the positive side, we want to end on a positive note for year end. By the end of 2023, we're going to be looking at a different picture where some of this stuff fades out, right? Inflation is falling. The job market is a lagging indicator. Corporations may actually just hold up because the consumer has been somewhat resilient. So we'll have to see how it all pans out. But I just think that these rallies are a little bit nice if you want to take a little bit off the table. But really, these 3 to 5% dips that we've had along the way are what are going to help investors, gather the acorns for long-term wealth creation.
The acorns. I like that phrase. That's sort of like
take what you can get.
It's sort of Christmassy.
Even Sylvia just laid out a lot of the variables that obviously the market's going to be digesting, and a lot of those would seem to be positive factors. But I think that investors this year were served some humble pie because the market didn't actually do with some of those variables what I think a lot of investors thought that they would. So how do you predict and how do you play what will actually happen in the next 12 months?
I think it was really appropriate that we started this segment by referring back to China and 2020 and comparing it to March 2020, as I think we really have to take into account just how much we've been through in the last 2 years. 2020 was when we turned our lives upside down. 2022 turned our portfolios upside down. We've had a brutal 2022 in terms of equities and bond performance. And for that reason, it's very much that investors are taking a breather, I believe, in these last few days of the year, just to take stock and almost to recharge, to prepare for next year. Next year is definitely going to see, I think, a digestion of some of these issues. I completely agree with Sylvia. We are going to see a moderation in terms of inflation. We're going to see that factor in some of these Fed rate rises, but we're also going to have to contend with a weaker dollar because clearly the dollar is going to come off, and that's going to have a negative effect on many aspects of the U.S. economy. And we're also going to have to deal with many of those other factors coming through. The house price numbers I expect will be weak. And I also expect that employment numbers will indicate that much of the froth is coming out of the employment market.
So, Sylvia, how do you invest then? Do you take cover in value names? Do you keep more cash on hand? What's the strategy?
Well, I think it depends on what type of investor you are. So I think if you're a short-term investor and you're looking to benefit from 2023, you probably start the first half of the year defensively positioned, right? You can look at things like healthcare, you can look at energy, which is held up. You can try to look for some new ideas like alternative energy solutions, hydrogen, for example, something that we really like and has, great growth prospects. But if you're a longer-term investor, the stock Nasdaq is down 32%. Some of the semiconductor stocks like AMD and NVIDIA are down 50%. So if I just think about the next decade of innovation and what we're investing in, things like artificial intelligence, electric vehicles, data processing, all of this, like precise defense spending and things, you need semiconductors for that. You need 5G for connectivity. You need, sort of technology to back all of these things up. So these stocks that are down 30 to 50%, I get it. They were overvalued last year, but they have really been taken off of their pedestals. And I think it's one of the best, valuations that we've seen in tech stocks over the last decade. So I think investors will probably allocate there if they have longer time horizons. So that probably won't play out in 2023, but it will be a value creation story if you hold on to those names for the next 3 to 5 years.